I want to thank you all for attending the Finesse My Business Launching to Leaping workshop this week. It was phenomenal, and your feedback and participation makes my job that much easier. So, this week we discussed the pricing. This entire workshop examines the techniques for developing a successful enterprise after you've launched. The curriculum has been developed to help you start leaping into a positive cash flow and improving your return on investment. Last week, we discussed having a niche target audience and successfully reaching them using some free tools and an organized approach in a strategic marketing strategy. This week, we discussed the financial side of business. We evaluated our fixed and variable expenses and determined how they impact our break-even number of products or services that we need to provide each month. And we reviewed some financial statements and forecast projections. When it comes to financing your business, a lot of us have done it the traditional way by using our savings account or borrowing money from family and friends. But oftentimes in today's era, there are all types of different ways to fund your small business. The one that we discussed the most on yesterday was crowdfunding. I showed you a few crowdfunding platforms and also some successful crowdfunding campaigns of a few of my clients. In order for you to be able to really successfully fund your business, oftentimes an investor or a lender is going to want to look at your personal credit. So in looking at your personal credit, I examined a few things that go into a credit score. So your FICO score, 35% of your score is made up of your payment history. So if you have things like slow pays, late pays, or just not paying at all, that's going to bring your score down significantly. And then next is the amounts that you owe. So that capacity, meaning if you have $1,000 credit card limit and you also have it maxed out at $1,000, that capacity is zero. So you've maxed out the card, which in turn decreases your score every month. So it's a great rule of thumb to have any credit card or revolving balances to be at 30% or less. So that will increase your score each month. In addition to that, 10% of your credit score is the type of credit that you use. Another 10% is the new credit that you achieve. And then 15% is the length of credit history. So sometimes if you have even some derogatory items on your credit report and they're very, very old, you might want to leave them alone because they're actually impacting your score positively, even though they seem derogatory. So this is a scale on your right that talks about what your credit score says about you or your purchasing power or the risk, right? So if you are in between the range of 619 and below, you're pretty poor. And if you're in between the range of 620 and 679, you're average. What we would like to see you do and get to is the 620 and above. So hashtag 720 and above. So hashtag 720 credit score. We also discussed the fact that if you don't know where you've been, you definitely won't know where you're going. So I asked the question, how much money did you make in 2015? Oftentimes that might be easy, especially around tax season. We can look at our adjusted gross income and say, I made $80,000 last year. But if you don't have those numbers, it's hard to forecast and understand where you might want to go. So I also asked the class the question, what were your revenues in the first quarter of 2016? Some were able to answer and some were not. We discussed the fact that you will need to understand your fixed expenses in order to understand what your break-even analysis is for each and every month. So this is an example of the fixed expenses for one of my businesses. So I absolutely take $2,000 from the business each month. That's my owner's draw. Then I have to pay my utilities, which is rent and telephone and insurance. Those are the only bills that I have, my fixed expenses that I have for that particular business. And your fixed expenses are those things that you have to pay every single month, regardless if you have a sale or not. So understanding that there are definitely variable expenses that you pay each month, but the fixed expenses must be paid regardless if you have a sale. Having that number will help you to better be able to understand what your break-even analysis is for the month. I gave 3 examples. The first example is my fixed expenses being $24.25, and with me just having one revenue generator, which is classes that I conduct. Those classes being $175 per class, right? So my fixed expenses, $24.25 divided by the classes that I put on, which is $175. I need to do 14 classes per month to break even and be able to pay just my fixed expenses. So I discussed the fact that if I only do 10 classes in the example number 1, I will be operating at a loss. But if I do 15 or more classes, I'm actually operating at a profit. In the second example, I talked about the fact that I also have books that I sell in addition to the classes. And even though the classes are 75% of my revenues, the books are 25%. So 75% of that $2,425 is $1,820. 25% of that $2,425 is $605. So if I'm doing that, and the average cost of a class is $175 and the average cost of a book is $20, I would have to sell 31 books per month and conduct 11 classes per month in order to break even and pay my fixed expenses of $2,425. And then I flip the scenario for example number 3, and you can figure that out. The next thing that we discussed is my sales forecast for fiscal 5. With that, I have 2 books. So I have the 21-day fiscal boot camp workbook. That one is $25. I have the 30-day fiscal boot camp workbook. That one's $20. I also sell t-shirts. I have memberships. I have monthly mastermind sessions. And I have my state board of cosmetology classes. And then lastly, the credit improvement movement classes. So what I was able to do is show you all a forecast, and my forecast showed that for the month of August of 2016, I expect to sell 20 21-day workbooks, 10 30-day workbooks, 10 t-shirts, 6 memberships, 2 mastermind sessions, 10 State Board of Cosmetology registration classes, and 25 credit improvement movement classes. So with that, my total revenues for August of 2016, if you just look at the first column, is $7,375. And I did the same thing all the way across from August 2017 through July 2017, with my numbers fluctuating depending on my market, my demographic, the weather, the psychographics of the clients that I actually represent. And so based on those numbers, as you can see down here in the State Board of Cosmetology classes that are $300, those numbers actually significantly go up until February of 2017. Then they go all the way down to 0. Because at that point, those folks will need to have had their 8 hours of continuing education units, and they will not be taking any class during the month of February, March, April, May, June, or July of 2017. So I accounted for the fact that I will not be selling those particular classes. But as you can see, other things were able to pick up as a result of me not having to do those classes. I took the numbers from that sales forecast and placed them here under cash receipts in the cash sales section. So as you can see, that $73.75 all the way across, that money has been calculated for August of 2016 through July of 2017. And the next thing I did is I took my fixed expenses that were from the prior documents and I put them here in this darker gray area. So my rent, again, is that $300 all the way across. The telephone is $90. My insurance is $35. And then I'm also going to pay myself $2,000 per month. Some additional variable expenses that I have is car, delivery, and travel. And what I did was I took a percentage of the cash sales and I used that percentage all the way across. Because if I'm going to be doing certain classes, I'm probably going to be spending money on travel and delivery charges for delivering materials. And so of that $73.75 for the month of August, I'm going to spend $332 in travel. And for September, $78.50, I'm going to spend about $353 in travel. And then lastly, the last expense that I have on here is accounting and legal, which is really going to be $125 per month. So, do you know how to read financial statements? Many of the people in the class said no. So let's just take a moment to look at some financial statements. Oftentimes when folks are giving you money or letting you borrow money, they want to know how well the business is doing. And you can't really just say that based on your own opinion or what you think the business is doing. They want to actually look at the financial statements. So it's good for you to understand what the financial statements are saying prior to giving that to someone else. Your balance sheet is actually the sheet that shows your equity in the business, what you own, what you owe, and then the difference between the two. So the balance sheet, if you split it right down the middle, the left side is your assets, and it comes to a certain balance at the bottom. The right side is your liabilities and equity, and that number at the bottom should match. That's why it's called a balance sheet. Those numbers should balance. In this particular example, the assets are $710,000 and the liabilities and equities are also $710,000. So they balance. That's the purpose of a balance sheet. I went in a little bit more detail about what type of things go on a balance sheet and what these numbers over here mean. And I won't do that today. If you need additional assistance, please just give me a call. Your income statement is also referred to as the profit and loss statement. So what this shows is the revenues that you've received, the costs that you've incurred, and the difference between the two. If that difference is positive, it shows that you're operating at a profit. If that difference is negative, it shows that you're operating at a loss. So in this particular example, the net profit at the bottom shows that you're operating at a profit of $39,440. It is so important that we understand the difference between revenue and income. So many of us use the terms revenue and income interchangeably. The best way to understand the two is to think about gross versus net when you have a paycheck. Okay? So gross is the total amount you earn on your regular paycheck, and net is the amount you get after the taxes, the premiums, and everything are taken out. This is the same for revenue versus income. Revenue is the gross amount you receive from every sale or service that you perform. And then revenue is also that top line number similar to your gross. Income is the bottom line number, which equals the revenues minus all of the expenses that you've incurred. It's very important for you to know the difference between the two because they could essentially be totally different numbers at the end of the day by hundreds or even thousands of dollars. In this example, we have revenues of $900 and the expenses come to $720. So the income is only $180. So if someone were to ask you, what was your income for this week? And you told them $900, that number will be totally off. So that's why it's important to know the difference between revenues versus expenses. Now that you know the difference between revenues versus income, sorry, I said expenses the last time, but you know what I meant. Now let's talk about the different types of income. So there's passive income and there's active income. Most times as entrepreneurs, the only income we actually generate is active income. Active income is immediate compensation you receive when you render a product or service. So therefore, if you're not actively working, you're not receiving any income, right? So passive income is probably where most of us want to be. That income continues to come even when you aren't working. It's the income that comes later after you've done something. Usually passive income continues and comes regularly and automatically long after an action is performed. So, don't you want some passive income? I bet. Do you know the number of revenue streams the average millionaire has? The average millionaire has about 7 active revenue streams. Active and or passive. So there's earned income, which is the money you earn by doing something, right? There's profit, the money that you earn by selling something for more than what it costs. Interest is the money you get as a result of lending your money to someone else or putting it in a bank or lending it to the government or any way. Dividend income is money that you get as a return on shares of a company you own, right? Then there's rental income, money you get as a result of renting out an asset that you have, such as any type of property, whether it be a building or a commercial or residential property. Capital gains is money that you get as a result of increase in the value of an asset that you own. And then there's royalties, money you get as a result of letting someone else use your product, idea, or process, and you generate royalties every time they use it. The next thing that I want to introduce you to is 10 possible revenue streams for your business, right? You may not be able to get royalties or dividends and things like that at this point in your business, but what you can do is implement at least 3 to 4 of these revenue streams. So the first one is your product or service, your main product or service. That should be how you receive the most revenue in your company. The second is additional product or services. So those complementary products or services that you can easily generate another revenue stream. For example, we had a person in the class that sell bundles. And what she was able to do is think about the fact that if folks are buying bundles, they're probably going to need a closure. So if they're going to buy a closure, you need to be the one selling it to them. And that's a complementary product based on what you're already selling. The third one is classes. Anything you do, you should master it fully, become the expert. And in doing so, you create a sense of authority and something that you can actually generate another revenue from. Number 4 is consulting, tutoring, or mentoring. Yes, there are novice professionals that will pay you to be their mentor. Number 5 is to work from home. On those Sundays or Saturdays that you take off of your regular work, you can still add to your income by selling a product or service online, conducting online surveys, or participating in focus groups, right? Number 6 is a part-time job. If you get a part-time job as a revenue stream, make sure that it's something that is in your field of expertise. Don't just get a job at Walmart because they're hiring. Get a job at Sally's so you can get a discount on your products and also possibly get insight into how the buyers buy so that you can get your product into the store. Now for some of the passive income streams. Number 7 is videos and books. So that is a way that you can earn royalties. You can record your classes or sell the videos or sell a book later after you've done it, and you'll begin to receive that residual royalty passive income. Number 8 is subscriptions and memberships. This is the one that is truly a gold mine. As a professional with ebbs and flow in any industry, there's certain times when people's money get tight, but if they actually have a membership, it's very unlikely that they will cancel. Number 9 is swag. So any form of advertisement or materials that you can use and brand, so you're actually getting a double benefit from having swag. So we sell t-shirts. Our t-shirts have our name on them. And so we sell those and we generate another revenue stream, which I showed you on my cash flow projections. And then lastly, you can do vendor events and sponsorships. There's so many events going on in Columbus that you could sponsor, become a vendor at, and actually generate additional revenues by earning different customers. So I want to thank you all for coming out. I want to let you know that I am available to assist you with putting your strategic plan together. Any assistance that you need, you can give me a call at 614-595-0784. Thank you.